G'day and welcome to Season 2 of Harvestable by AgriDigital. Our 8-part mini-series will feature raw and unedited fireside chats with some of agriculture's most insightful minds, sharing their perspectives across the grain supply chain. In this episode, we are joined by Jackson Morris, Manager of Acquisition and Domestic Trade at Premium Grains.
So hi there, Ben Reid here, co-founder of AgriDigital and another episode of Harvestable today. And on the other line, I've got Jackson Morris with me. How are you, Jackson?
Yeah, well, thanks, Ben.
Very good. So Jackson is Manager of Acquisition and Domestic Trade at Premium Grains. Premium Grains are predominantly a grain exporter based in Perth, WA, and today's conversations really, I guess, centred around what's been happening in Western Australia for the last couple of years and what we've got forecast for this year. Some quite, big sort of big things happening in the West, and I think it's important that we get some detail on that today. But before we sort of get into that, Jackson, if you wanted to just give us a little bit of background on yourself, who you are, where you've grown up and how you ended up in grain, I guess, and maybe just then a little bit about Premium Grains. Just give us some background on what you do there.
Yes, I've been with Premium Grains for just over a year. But prior to that, I was working for a Japanese trading house, Itochu, managing their Australian grain book, and I was there for 5 years. And then spent a little bit of time in Queensland, working for a company called Australia Milling Group, doing their freight. And prior to that, was a trader at Gavilon when they were over in Perth. Yep. So I've been in the industry for about 10 years.
Very good. And I guess prior to that, did you grow up in the West?
Yeah, yep, always been in WA, except for the stint I spent over in Toowoomba. But yeah, I'm actually a city slicker. I've got some family that are farming. Born and bred in Perth. Very good.
Well, it's good to have diversity in the industry, and yeah, probably be good to just understand a bit more about Premium Grains and what you do there. I guess Premium Grains has been a software customer of ours for quite a number of years, so we've had plenty to do with the business. But yeah, if you can just give the listeners a bit of a background on what you do.
Yeah, so Premium Grains is primarily a containerised grain exporter out of Freemantle. We do about 150 to 200,000 tonnes of grain sent in containers across the globe. We've got 4 upcountry storage sites as well, dotted around sort of the Kwinana zone, and they're all about 150 to 200 k's away from the site. And my role at PGH is really just chatting to the growers, I guess giving them daily prices and buying their grain, and then also just seeing if there's any domestic opportunities, whether that be to the other container traders, whether it be to some of the bigger traders in the track market, and just liquidity to our marketing office in Singapore. And he then chats to all the customers around the globe. So just kind of putting the buy and the sell together.
Good background, and I've been to your site a few times, Jackson. Recently I was there recently with you. A pile of containers everywhere, and probably just for everyone's benefit, maybe just if you wouldn't mind getting into the detail about what type of grains you put in containers, and probably what countries you actually export that grain to.
Yeah, so we can do pretty much every commodity that's grown in WA. We've got the ability to export. Predominantly our main commodities are probably wheat, barley, oats, lupins and peas. And we ship those literally to all 4 corners of the globe. So sometimes some stuff into Europe, a lot of stuff into Asia, China, Vietnam, Philippines, the Middle East, the Indian sub. In reality, every week there's probably 10 different countries we're shipping stuff to.
And then probably before we sort of get into talk about what's happening now in Western Australia, but just for everyone's benefit, the logistical challenges I guess you've had in containers, and where that's at now. I guess have things settled down? Last year we had all sorts of post-COVID type challenges with containers and access. Yeah. Is that sort of better now? Or?
Yeah, look, it's improving. It's nowhere near what it was pre-COVID level. But it certainly improved a lot in the last 6 months. I think once we saw China sort of come out of that big lockdown in Shanghai and Beijing and Guangzhou, everything sort of righted itself a little bit. In saying that, you look at some of these global container freight rates, and the charts kind of show they've gone from, for example, like Shanghai to the US has gone from, $18,000 back to $3,000. We're not seeing that reflected over in WA, and I think probably Australia. I think the demand we've got for all these battery minerals that go out in containers and all this other mining product that goes out in containers is really supporting that container freight price. So that's made it's made our marketing a little bit harder. The Indian sub in particular has been very difficult. Freight there is still probably in the low 200s per tonne to get product from Freemantle to India. And there's a huge amount of demand there. But not only is the cost of freight so expensive, it's also that the shipping lines have been curtailing our ability to get access to the containers as well. So, normally you might get 40 or 50 containers a week into one destination. At the height of COVID, they were saying, okay, you can have 5, it's only 125 tonnes. 2 road trains. So that has freed up a little bit, and it certainly looks like it's going to continue to get better, which is very positive considering we're staring down the barrel of a massive crop down here.
Yeah, it sounds like the trend's heading in our direction a little bit. I guess as an exporter, you've got to pass those costs on ultimately through lower prices to the farmer, I guess, to maintain a margin. But it sounds like that container freight rate prices are trending down, which is encouraging. What's the correlation then across to bulk freight rates? And is it? I mean, I know you're not necessarily exporting in bulk, but is there a correlation between container and bulk freight costs?
There is in relation to the fuel, I guess. Not really. I mean, I guess when we're buying stuff in Fremantle, we're basing it where the market is, and the market in WA is really a bulk market. So our container prices have to reflect the bulk market. So they do move in lockstep to an extent, but it's not really the freight price that's driving it. It's just where the global CFR price is, the landed price in China. That's what's really driving it.
Probably more sort of now talking more about just generally in Western Australia. There's been some good years over there, good times. And, we talked about this when I was over there a few weeks ago about the level of production that was happening over there. You've gone from 15, 16 million tonnes of grain produced in Western Australia. Used to be a big crop, and, last year was a record, I think 23 or 4 million tonnes, correct me if I'm wrong.
Something around there.
Yeah, and this year looks like it's going to be, potentially another record breaker as well. So maybe just for context for everyone not close to it, what is that? What has happened there, and what's caused? What has that caused with the market?
Yeah, I think we've just had 2 Goldilocks seasons. I mean, this season in particular, we haven't had any frost events. So last year we were staring down a massive crop, and then in I think September there was a really widespread frost, which people estimate probably knocked 1 million tonnes off the crop. We still produced, I think it was like 23 million tonnes. And then this year we've gone sort of again without having any frost, and we're looking at about another 23 million tonne crop. So that's like previously the highest was I think 18.5 million tonnes. So it's just a massive jump. And then to have back-to-back records, it's crazy. It's put pressure on. It's great for farmers, but it's put a lot of pressure on the supply chain, logistics. You drive down the highways here, and there's just lots and lots of road trains all moving grain to port because demand has just been so consistent throughout the year because there's been so much to export. You look out in I drive to work and I drive past the coast, and you look out, and there's just ships all along the coast waiting to go into Kwinana to load up with grain.
Yep, it's like a parking bay.
I mean, I think at the peak, those ships were waiting about 30 to 35 days to get into port. because there was just so much demand. It was creating congestion, and like that would have been expensive because I think the demurrage cost on those vessels would have been around $25,000 a day. So you can do the maths. It would have been very expensive.
Yeah. Well, it just shows you all of the costs that are getting chewed up in the supply chain that cost the buyer at the end more, and it's obviously a lower price for the farmer at the other end of it. So challenging, I guess, when you have these big crops. You know, if we had big crops every year, it'd be easy for the market to work out the capacity that we needed to ship it all out. But it's not that simple, is it?
No, exactly. I think there's been a lot of commentary about port capacity over here and about the reason that I think growers are perceiving they're not getting relative value, relative global value for their crop is because there's just so much supply and it's actually more than the port capacity. But the last 99 years out of 100, the CBH has had ample port capacity. We've just had 2 years which have been unheard of, and then to go back to back, it just means we're going to carry in a lot of grain, and there is going to be more production than capacity.
Yeah,
it'll take a couple of years to bleed that out, but it'll get back to normal. Yeah,
it will. But in the meantime, I know it's quite topical at the moment. There was, I think you mentioned a Country Hour story today about Western Australian farmers feeling like they're not getting fair value for their grain at the moment. Maybe just for everyone's benefit, if you just want to explain why that happened and explain how the export slots are allocated.
Yes, I think it's pretty much just supply and demand. So we had 23 million tonne crop, plus let's say we had a 2 million or 3 million tonne carry-in. Let's call it 25 million tonnes. I think CBH only has 18 million tonnes of capacity in the export program. Containers probably do another 250,000 tonnes, maybe a little bit more. And then the domestic market probably has another 200 or 300,000 tonnes. So there was far more supply than there was actual capacity to export. And that just meant that the merchants and the traders didn't have to fight as hard, I guess, to find the tonnes.
Yeah.
And then as the season, the current season just improved and improved and improved as it went along. I think everyone was going, gee, there's going to be another big crop. So again, we don't have to overpay or push too hard to get the grain. And
then the added complication there too is that the export slot auction, which I'm not sure when that was, early this year.
Yeah.
The CBH usually buy quite a big percentage of that annual export capacity, and that's the CBH trading entity, that is, not the bulk handling entity. And this year, again, don't quote me on the numbers, but there was a significant reduction in the slots that the CBH trading business purchased.
Yeah, I mean, I think so. CBH operations allocate the capacity to the traders that want it, and they base it off long-term commitments and short-term commitments. And I think that, just from an outside looking in, there was probably there would have been disgruntlement from the trading team because they didn't get as much capacity as they wanted. But I think that the operations side also have to try and be as fair as they can to the other potential exporters as well. So, they're trying to give everyone a bit of a pie. And when there's more customers, it just means that the incumbents, being CBH Trading, unfortunately had to give up some of their share. Just the way it is.
Yeah, sounds like it. So I know there's a bit of chatter at the moment about farmers wanting to forward sell, new season's production. They're about to kick off harvesting at some stage this month. I'm sure there's already harvest commenced over there in some parts.
Yeah,
but the inability for those, the farmers to sell enough grain that they want to forward sell because the depth of the market's not there. And again, that's probably just a function of everything we've just discussed with the large crops and less export slot capacity that the CBH trading business has this year.
It's been good. It's been good, I guess, for our business, and probably it's been somewhat good for the industry to find other homes as well. So I think more growers are looking at on-farm storage than just delivering straight at harvest time. They're probably looking at the way they market their grain a little bit differently. There's probably guys that we haven't spoken to that are now talking to us because we're able to take tons and book them up for them now where maybe other traders can't. But like I said, next year it'll be completely different. I doubt we're going to have 3 back-to-back records. And you'll probably find that there's ample capacity and everyone will be fighting to get tons again.
That's right. No season's the same. So yeah, well, that's really, really helpful, really interesting. We could talk forever, Jackson. Appreciate your time today. And, I think as you rightly put, different marketing options for farmers and, the deregulation, I guess, of the container market for a very long time now, but it's another option. It's another channel to get grain out, and probably for your customers that you're exporting to, I'm assuming many of them bulk grain doesn't suit them. Like containerised grain suits them down to the ground for their demand. So I'm assuming that's not going to change.
And that's sort of been a shift that's happened over the last probably 15 years. You've had smaller mills prop up who are trying to operate on a sort of a niche and just-in-time base. They don't want to buy 50,000 tonnes of inventory. They want to buy 500 tonnes every week. And that's where we come into it. We've got customers who we just regularly ship every week, their consignment. And, I think that style is going to continue, particularly in Asia, where there's far more ports and different mills dotted around the place, rather than just going, okay, we're going to put 60,000 tonnes of barley into Saudi Arabia. We're talking to smaller mills, who want stuff on a just-in-time basis.
Yeah, exactly. That's what I was about to say. Yeah. No, that's really good, Jackson. Well, we good luck with the year ahead, and appreciate your time today.
Yeah, thanks, Ben. Appreciate it.
Thank you for listening to Harvestable by AgriDigital. We hope you enjoyed this fireside chat and see you next week for another episode.